In Australia and the US, real estate is looking like it's taking a turn for the worse. There are certainly a few bright spots, but the trend is making itself known. Sales are down, interest rates are up, and the general sentiment is very shaky and uncertain. All those who bit off more than they can chew are not even aware of what they got themselves into. You came here for the truth, so let me unveil that for you. Today we're going to look at real estate in the US and Australia, and I will begin with Australia. I'm going to say hello to all my friends in Australia today. Once again, you have been asking more info about our country, and certainly I'm going to bring that to you. So let's get into this right away. Tumbling house prices in Sydney and Melbourne are the main drivers behind the first annual drop in national property prices in 6 years. The national median house price fell 1% from the previous year. Now you might think, well, that's not really significant, but I'm going to show you some of the more subtle factors today. In the first time values have fallen on an annual basis since June of 2012. The negative national growth rate reflects weakening housing prices in Sydney and Melbourne, which together represent about 2/3, that's important, of Australia's housing market by value. Sydney house prices fell by 4.5%. It's the largest annual drop since 2008. Okay, so number one, understand the fact where the population resides. That's where we need to have our focus. And you can look at this from any country, really. Take the major cities, maybe a handful, 5 cities, and that represents the majority of the population in so many cases. And that is where we have our focus. When the prices come down there, that usually leads the trend. There could be other factors. For example, if you have an area that's booming in a particular commodity, then that commodity is obviously going to bring in some businesses. The real estate might grow there and so on. But the general economy might be weakening surrounding that. So you have a little bit of a mix up occurring. Then I want to look at basically the fact that Sydney, Melbourne, these are 2 very, very big cities for Australia. We need to always keep our focus on them and see where they're going. This is showing a downtrend. 4.5% is significant when we're looking at a place that's, millions of people. Okay, quickly, I have a lot to get to today. Australia's building commencements fueled by investor apartment construction look like it's heading from boom to bust. So that is something significant. Just quickly to cover the details of that. In a reality check for investors who bought at the top of the apartment boom, Biz is predicting the biggest correction since the global financial crisis, with housing starts set to fall by almost 23% by 2020. That's their prediction. I think that's actually quite weak compared to what we will actually see, but here we are. Okay, there's more details in this. I just wanted to show you these other factors which aren't really being discussed. Yes, we can see the sales. Yes, we can see the prices. But we need to look a little bit deeper. And always, if you're going to buy real estate, if it's for personal, if it's for business, you want to look at what's happening in the community. Are there new buildings going up? Not just what you heard. You got to check the permits. You need to know about what's happening. Did you even walk around your neighborhood? I want to be able to find out exactly what's going on. There are different ways to do that. That's a different video. All right. You can see that house prices have stagnated, and the price effect is really going to start influencing investor behavior on top of all of the policies which have been trying to keep the speculative element of the housing market under control. I would disagree and say that they actually fuel that, but hey, difference of opinion. Thousands of Australians are struck in a, quote, mortgage prison with the new lending criteria, leaving them unable to refinance their loans to get a better rate. This is what was happening for years. Different countries around the world were simply able to take advantage of real estate and the fact that interest rates kept declining. So they would just refinance, never have a problem. But today, the things are very different. Okay, changes in bank rules around living expenses calculations have effectively wiped huge amounts off the maximum a bank will allow you to borrow. The article gets into that further, essentially saying that as borrowing costs are rising, the customer has to pay, but they literally can't afford it, so they're being pushed to the edge, and unfortunately, this is not going to end well for them. I'll spare you the details. You've heard me talk about this many times before. Property owners in Victoria have to pay a land tax, but it may be exempt if you live in your own home. All right? Land tax bills increased in 2017 after last year was a property revaluation year. The value of the majority of properties increased, affecting the cost of the land tax. Owners only pay land tax when the property is more than $250,000, and that's most people. All right? This one individual here talking about how much they had to pay and so on. Today, people are paying $620,000 for the average home, $32,000 extra for stamp duty. On a 25-year mortgage, you're going to pay $24,000 in interest on the stamp duty. So basically, it's in total, it's going to cost $56,000 per house on average in Victoria over the life of a mortgage. We are talking about extreme levels of taxation and expenses that are not really understood by people who get into buying a home. Now, moving on to my neighbors to the south, the US. Southern California home sales crash. That's not my words, that's CNBC. All right? Sales of both new and existing houses and condos dropped 11.8% year over year as prices shot up to a record high. The median price paid for all Southern California homes in June was a record $536,000. All right. These keep going up. Yeah, we see the sales are declining. We see the inventories building and everything else I've touched on before. In the past, California, one of the largest housing markets in the nation, has been a predictor of the rest of the country. I would also say that we need to pay attention to Florida as well. After strong interest for several years, international buyers appear to be souring on the U.S. housing market. The dollar volume of U.S. home sales to international buyers between April and March 2017 to 2018 dropped 21% compared with a year ago. That is intense. That's a significant amount. And this could be because we see the tensions going back and forth, or perhaps the international buyers are looking and thinking, I have better places to put my money, or if it's Canadian investors trying to go to the US with the dollar not being so good, perhaps they're having a wait and see moment. There's different factors here, of course, and it is difficult to really decide if this is an international buyer or not. We really don't have good statistics on that. Of the $121 billion in sales to international buyers, those currently living in the U.S. purchased $68 billion in properties, while non-resident foreigners purchased $53 billion, marking a drop from the previous year, and it goes on, okay? Look at this here, the 1-year price change percent by metro area, March and April of 2018. One thing I want to note, first of all, is the fact that at the bottom here, average hourly earning growth 2.6%. So compare that. How much housing has increased versus your annual wage growth. Okay, and 2.6% I think is not even accurate at all. I think that's actually too high, but here we are. So we're looking at the green representing March of 2018, and the blue is April of 2018. Okay, so it depends on where we look. We can still see that many places have continued. They've continued their increase, whether that is in Seattle, whether that is in Las Vegas. But one interesting one I'm noticing here is San Francisco. Quite interesting that it's actually on a decline here, but the prices themselves, remember this is a price change percentage, the prices themselves could definitely be higher today than they were a month ago, and will possibly be even higher in a few months from now. Who knows? All I know is that we are seeing the general slowdown, and that tends to happen in one city, and then two, and then three, and four, and suddenly things start to unravel. Bad buying conditions for homes due to interest rates that is increasing, and we're going to see this as a factor in every country as their interest rates rise. That means mortgage rates rise, and that means people simply can't afford their homes. They took on way too much debt. Existing home sales dropped in June for a third straight month. Purchases of new homes are at their slowest pace in 8 months. Inventory, which plunged for years, has begun to grow again as buyers move to the sidelines, sapping up the fuel for surging home prices. Okay? It gets into more details, but just look at this, talking about the home prices that are plateauing here. They're just waiting it out, trying to see what happens. They're trying to build up some equity in their home and then perhaps get into something later. They can't do it at this time. That's really what's happening. Now, Atom, ATTOM, their website is excellent. I've shown you them before. This here shows us the Q2 2018 home price appreciation heat map, or should I say deceleration. All of these blue dots that you're seeing here all over are deceleration. Can you believe it? To me, it looks like there's more blue than red. If I go to this, and I suggest that you do the same, I can put my mouse over and try to give a good idea for you what we're looking at here. Santa Rosa is increasing. We're seeing San Francisco area increasing, certainly. And I can just take a few that you may recognize here if you're seeing this. Denver apparently is decelerating quite a bit there. But anyway, I'll stop there. It's just I think that it is important, not just for people where they have their homes, which of course you should do this, but if you're interested in buying a home in a certain area, then you want to be able to look at something like this to see what the market is like right now. You can see the prices, but prices are only a small factor. There are so many things to look at. So I'll end it there. If you found the video informative, please give me a thumbs up. Your thumbs up really do support this channel, so I do appreciate that. And last but not least, if you found the video informative, I know you'll find my books even more informative. You just got to check them out. They're truly amazing, really simple, easy to read, yet so in-depth. So link is in the description of the video. And if you're more interested in the audiobook version, you can get that at themoneygps.com. I just want to thank you for your time today. If you're still here, definitely tired. It's late at night, but wanted to bring you the video, especially for those who are watching it right now as I post it. Probably my friends in Australia. Want to say once again, hello, good morning to you, good night to me, and that's it. Take care.